Thank you all for being here. Hope this would be a start of a very rich conversation. May I start with Aileen? Aileen, as I said, having worked at the Secretariat of UNFCCC as well as the national governments, how well do you think the global climate finance architecture, including the mechanisms like the Loss and Damage Fund, Green Climate Fund, as well as the other operating entity of the Secretariat, is delivering financial protection for the most vulnerable communities as well as the populations?
Thank you, Shifaz. I hope everyone can hear me on the mic. Yeah. Okay. Your question, I will first try to unpack two concepts, like elements there. Firstly, the reference to the international climate finance architecture. So by saying international climate finance architecture, we are referring to a wide variety of institutions and entities. And I would say the most important in terms of climate finance is the multilateral climate funds, which are serving as the operating entities of the financial mechanism of the UNFCCC and the Paris Agreement. So these are the institutions like the GCF, the GEF, the Fund for Responding to Loss and Damage, and the Adaptation Fund, which are guided by the COP and the CMA provide guidance to these funds to make sure that they serve in line with the objectives of these agreements and the respective mandates given to them. And these funds are also governed in an inclusive manner where recipient countries also have seats in the decision-making boards. So I think these funds are like the key institutions in the climate finance architecture. And besides that, we also have the IFIs, the MDBs, the bilateral development agencies, also other civil society-based initiatives, banks, many institutions. The second concept I want to unpack is the concept of vulnerability. So who is vulnerable, recognized as vulnerable under this regime? So we heard this morning about how this impacts, for example, countries like Sri Lanka. We saw with TITWA very clearly that Sri Lanka is a very vulnerable country. But usually different funds apply different interpretations of vulnerability. For example, the GCF, under the GCF, half of its adaptation finance has to go to what they define as vulnerable groups, which are LDCs, SIDS, and African states. Similarly, the FRLD, the Loss and Damage Fund, has a mandate to set a minimum allocation flow for LDCs and SIDS, again, which would exclude vulnerable countries like Sri Lanka. In case of the Adaptation Fund, this is a bit different because they have a uniform country allocation cap, which is right now set at $40 million per country, but this is uniformly applied to all developing countries. So I would say the concept of vulnerability itself is questionable. So maybe there is opportunity for countries like Sri Lanka to even be more actively engaged and vocal in these climate finance discussions to make sure that your concerns are heard and incorporated in the decision-making processes of these boards. And this can be, I guess, done through, usually these funds have representation as Asia-Pacific representatives on the board, so maybe more closely engage with your representative there and ensure that these concerns are conveyed in the fund's decision-making processes. Another thing maybe I want to talk about is the adequacy of the resources in these funds right now. Given the current geopolitical context, the picture for climate finance in the immediate present is not looking very promising, I would say. For example, we saw recently concluded pledging for the GEF under its 9th cycle. We saw a significant reduction if I remember the numbers correctly, it's a reduction to something about around 3 billion from the previous 5 billion in the Jeff 8 cycle. Similarly, recently the government of UK announced that they are reducing their pledge to the GCF for the current replenishment cycle, the current ongoing cycle, from $2 billion to $1 billion. So, yeah, this does not look very promising right now. So there's an ever greater need to make the most effective use of whatever finance is available through these funds and make them an opportunity to facilitate mobilization of more finance from other sources for your climate investments. Yeah.
Thank you for that, Aileen. So that actually catch our conversation to somewhere that it is very pertinent. So as you said, like there's the mechanisms under the UNFCCC as well as the multilateral facilities that is out there, and the funding is getting like lower and lower, and it is going down, as well as there's issue of adaptation fund shares proceeds as well. So in this architecture, we have also committed to a goal of 1.3 trillion in COP29 at Baku. So that out of that 1.3 trillion, only 300 billion is going to come from the developed country parties, but the rest of is basically the private sector's involvement in it as well. So I would like to take my questions to Rukshila. Rukshila, being a representative of a DFI, a prominent DFI in Sri Lanka, as well as internationally, you work with the intersection of private sector development and climate finance. So what opportunities do you see in this crowding private capital into CDRFI for solutions in Sri Lanka, then particularly on the sectors of tourism, apparel, as well as food and agriculture systems?
Thank you very much. I think that's a very pertinent question. So we are at the World Bank in the process of launching our World Bank Group strategy for Sri Lanka for the next 5 years. That's from 2026 to 2030. And increasing resilience in the economy is one of the 4 pillars that's captured under the strategy. And this is because, you can help the economy grow, but these climate risk events and disaster risk events lead to setbacks and shocks, as we saw with Cyclone Ditwa. We saw that we estimated that about 4.1 billion in terms of damages was caused by that particular climate event, which is around 4% of GDP. So as Aileen rightly mentioned, there is scarce donor resources. There are fiscal constraints. I know there were mention of a few different national funds that are available, but there is a need to stretch the funding available. So in terms of crowding in the private sector, I think there is a need from the government side, when you say there's a national disaster risk strategy, to be clear about what exactly will be covered, because there is always this expectation from smaller micro enterprises that, if there's a disaster risk event, that there will be their damage to some extent will be covered, which dissuades them from obtaining their own insurance. So maybe a targeted approach to vulnerable groups where they could look at covering the premiums. So as to crowd in the private sector insurers would be one approach. But one of the main concerns is the data availability. So climate data, hazard data, exposure, loss data, and that should be made available in a transparent and cost-effective way so that it encourages more and more insurers to come into the space and develop products. Because at the moment in the agri space, there is still a need for a lot of crop insurance products. So for each crop, you'll have different insurance products, and this is an area that IFC, which is the private sector arm of the World Bank, we are very much interested in and looking at to help the Agrarian Insurance Board develop a product. But of course, we rely on a demonstration effect. We want others to come in and come in and continue our work. We like to demonstrate the commercial case for the crop-based insurance, but we want others to take that journey forward. And from the financing perspective, over the last few years, because of the droughts, the floods, etc., and the external shocks that the tourism sector experienced, we saw a lot of the banks de-risking their portfolios to some extent. So the amount of funding available to these sectors has been reducing. They're going from the formal sector to the informal sector and paying higher rates. So from a banking perspective, it would be good if they could look at either pricing in the risk or introducing insurance products as part of the banking product offering without shying away completely.
Rukshila, for making that point there on the data availability and the exposure of it, as well as the demonstrating something that can be achieved within the sector as a financial sector. Marir, if I may pose the next question to you. So with Aileen and Rukshila both speaking to finance part of it, but we know for implementation you need 3 means of implementation. So we have the technology, we have the capacity building, then we have the finance. Being at UNFCCC Tech Executive Committee for some time as Vice Chair and Chair as well, how do you think that it is role evolving in supporting CDRFI solutions, and particularly for the developing countries and the climate vulnerable countries?
Thank you very much, Shifaz. And also, I would like to echo that concerns about finance is being always projected as one of the key enablers as well. But sometimes technologies is also where we would also need to focus sometimes in order to even access to climate resources as well. As you may have heard in the interventions that was made by Angela as a former co-chair of the Santiago Network on Loss and Damage, the technology mechanism of the UNFCCC was also established similar to the loss and damage mechanisms as well. If we can go back to around in 2000 in COP 16, where in Cancun countries agreed that there is a need for technology improvement and needed for climate action. So countries agreed to form 2 bodies. One body is called Technology Executive Committee, which is kind of the policy arm which develops policy instruments such as policy briefs, which is very related to the access to finance related to technology as well. And the Technology Executive Committee has done a lot of work in terms of collecting information that is available within the local communities and then bringing up this not only the nature-based technology that is existing, but the local technology that are available to improve climate-related solutions as well. Additionally, the other body that was formed in Cancun was the Climate Technology Network Center. It works very similarly to the Loss and Damage Santiago network that was also established. It is through these networks, these members, that forms the partnership along with the Secretariat of the CTCN, where countries implement technology-related matters in accessing financial resources as well. It is quite good to see there is a progress that has been made in the CTCN, where some of the technical assistance that was provided to the countries has been now realized into a full-scale project that has been now also funded through the Green Climate Fund, one of the operating entities as well. So that connections is always important between two enablers, which is climate technology and climate finance for the improved climate resilient pathways, if I can say. Thank you very much.
So that takes me to Mr. Saturu Singha. Mr. Saturu Singha, Rukshila just mentioned that the agriculture sector itself still needs more support in coming up with risk transfer mechanism. So it actually goes well with the tourism part as well, and in forestry, natural forestry as well. So in this natural environment that we are living in, how the climate risks currently affecting these sectors, and how adequate is this financial protection that is perceived to be there for businesses as well as the communities that mostly depends on them itself for kind of as a living. I think more than 80% of our population still depends on this.
Thank you, Shifas. I think this is a really important question. If we take especially tourism and the forestry sector, they are really dependent on each other. They have a shared dependence. Now, for example, if you take the wildlife parks and even the coastal areas and coastal ecosystems, and their existence is vital for the tourism sector, as well as forest also indirectly provide ecosystem services like changing, to watershed management and water regulation. They provide electricity and water for the entire country. So keeping this in mind, I think because of this interdependence, not only we have to always consider these two sectors together in this case, I guess, because now, the recent examples I can get now, for example, we had this floods, ditto floods as well as the previous floods. Now, for example, there's a flooding in Yal, Singharaj, and various other tourism attractions, which were again had a lot of destructions to the environment as well as the tourism sector. And especially looking at the community, both because now we are looking at now, for example, the major tourism operators. I think they at least they have the insurance for their huge buildings and operations and other things. But of course, now within the peripheries of the forest, these are rural communities, and especially rural village women are engaged in now, for example, the running of homestays and various other things, as per my understanding and my experience. Now they are highly affected. There's no mechanism at the moment for them to tap this climate finance, this thing. As well as in the forestry, again, I don't think if you take the forestry alone and the forest ecosystem, right now, I think it's really difficult for the forestry sector to tap this climate change. One thing, in the morning sessions, we heard a lot of, the financial opportunities, but still when it comes to the forestry sector within Sri Lanka, it's really, really difficult. Now, for example, even international agencies as well as the government, they have their own preferences. It's definitely go for energy sector or transport sector or whatever this thing. But when it comes to the forestry, forest ecosystem is really limited. So these are the things. Again, in the forestry sector, now, for example, my personal experience is now we had number of community-run nurseries at their home gardens, again run by the women. So they were just destroyed. There's no one to compensate. So those are the real issues in the field at grassroots level. So there are opportunities. I think we discussed that also during the morning session. Now, for example, if we can even now the emerging payments for ecosystem services. So it's happening. It's almost emerging with the one Green Climate Fund project, this Nakul Central Highlands project. but still trying to identify and still trying to articulate it into the national system. But of course, this has been trying for years and years, but still not proper sort of success. And then we can talk about the green bonds, if it's happening, and even various other sort of nature-based solutions and related activities. But yeah, it's, my takeaway statement is, now these are highly interconnected and they are interdependent. So we can take them together in most of the cases, and then we have to look for finance. There are opportunities, but right now I don't think we have sufficiently tapped them for this thing of the nature.
I very much agree with that. The scale is very low when it comes to the forestry part of it, and maybe with that the TFFF Tropical Forest Forever facility that was launched at COP30 might be something to look at for as Sri Lanka as well. How that can be maybe supporting the not only forestry but the extension towards the agriculture as well. So talking about agriculture, we cannot leave livestock out of it. So I would like to pose the next question to Dr. Daniel. Livestock, if I may correct me if I'm wrong, I would say livestock industry is even more exposed to climate risks than the agriculture because of purely the lack of instruments readily available for the livestock sector itself. So having engaged in the project work across the two phases and having analyzed lots of work around the livestock and agriculture, what does the current landscape of financial protection look like for farmers as well as livestock? And what is the most critical gap that you see, especially for the livestock sector?
Thank you. Yes, as you said, livestock, together with agriculture, are very important sectors, both in terms of food security and also for employment and other benefits to the economy. And at the same time, unfortunately, the livestock sector, when you talk about like financial protection against climate shocks and also weather-related eventualities, the players who support to provide financial protection is very few. And of that, the predominant player is the Agriculture Insurance Board, Agriculture and Agrarian Insurance Board, which had been in operation providing financial protection from about 1970s. So you can see it's from 1970s even up to now, we still have a lot of difficulties in providing these financial services as well as extending its coverage. The present schemes, unfortunately, cover very limited scope, like death, theft, and inability of, like, so if you have a cow, you keep the cow for milk, but if the cow is unable to provide milk, then it is not keeping, producing or serving its purpose. So we call it like permanent disability. So permanent disability is also covered under present insurance. But if you are talking specifically in terms of these climate shocks and weather-related events, one we have not looked at is the production lost. So because of extreme heat or extreme rain, animals can be under severe stress and their production can go down, both in terms of milk or even in terms of weight gain, in the case of broilers, or by way of affecting the feed base because of this. But unfortunately, we don't have any mechanism to capture those losses and provide adequate protection. So having said that, there are only few players. I must also mention some of the private sector people who entered the insurance, even as far back as 80s, like Selinko, who first came. And many also started entering with the importation of cattle from Australia in 2018 or so. So we were very happy to see that private sector was entering. But unfortunately, now the situation is that they have also slowly moving out of the industry participation can come to the issues why they are sort of gradually coming on. So as it is now, only the Agriculture Insurance Board is providing protection against, finance protection against these extreme shocks, climate-related incidents, as well as diseases, losses due to diseases, theft and other things.
If I may, I would like to follow up a question on the invention itself and then move to next panelist. What would a meaningful CDRFI solution for agriculture and livestock sector would look like in practice? You refer to certain elements that may not be covered from the like traditional insurance mechanisms as well. So how do you see this being included into the architecture of the insurance products that is being introduced? And then what is the biggest barrier getting there?
Yes, of course, there are several areas that can be incorporated. For instance, now with the recent DITWA, I know some farms which lost very valuable breeding stock in poultry, but they had some insurance under general insurance schemes like fire insurance, but there was no specific livestock insurance as such. So they were paid some compensation, but it was not adequate to cover their real value of the birds taking into their production possibility. Similarly, there was a case where some damage to solar power system and the entire house got burned. That was also paid through this general insurance, but not through any livestock insurance. So what I would see is that, and there are also possibilities to introduce index-based insurance, such as relating to weather events and the temperature humidity index, and see how their production losses are, production is affected. But for those things to happen, we need a lot of documentation, a lot of record keeping, and a complete overhaul of the present production patterns. Because right now, even to get this indemnity-based insurance claims, you need veterinary certificates, and the veterinarians are unable to provide certificates because there's difficulties in identifying the animals. There's no proper system of knowing which is insured and which is not insured. So, and also to know whether they were adequately provided the mitigating measures like vaccinations or other management practices. So there are several barriers in terms of management improvement and record keeping and veterinary verifications. So if those can be addressed, then we can also incorporate this index-based insurance with indemnity-based insurance, which should be a easy implementable mechanism for future, though unfortunately we are very far behind such a process.
That makes me think that innovation is something that we need to be looking at, especially for the sectoral application for agriculture as well as livestock, but beyond that to the other sectors as well. Moving from innovation to the sustainability, Mr. Satru Singh, I'll come back to you on this. You mentioned the payment for ecosystem work that is being done, as well as the other nature-based approaches that is being taken. And they are gaining the global attention as well. So do you see any opportunities to connect these frameworks with CDRFI, disaster risk financing, especially for the forestry and tourism sector?
Yeah, I think it's really Sri Lanka is exceptionally positioned for this approach because now, as I mentioned earlier, now in our country, the 30% of land is covered by forest or the plantations, whatever, and most of these forests, the tourism potential has not yet been studied in most of the cases now, especially the ecotourism and the nature-based tourism. In other, but as well as now we have the high biodiversity comparative within a small area of land, as well as we have, like we say, we have two national World Heritage sites, and strong forest as well as the wildlife area network. And again, even from the tourism sector, it's again, we are looking at the sustainable type of tourism. So with these interventions, I think we are well positioned to look for these nature-based solutions as well as CDRFI type of framework type of actions. Now, for example, if you take mangroves, again the forest ecosystem, like they protest, they protect the sand, seashore, and the coral stuff. And if you take the coral reefs, again they protect the sea erosion. And now those are the areas where we have this nature-based solution in practice. But again, if you take the forest restoration for catchment protection, watershed management, water regulation, as well as for the various other environmental services, even including what you call electricity generation, hydropower generation. And even in urban areas, we have heard that the urban forests, they have a lot of actions like heat stress removal, as well as sound barriers and various other things. So I think when we, like, with these examples, we can easily say, we can easily demand that nature-based solutions as a very high potential in Sri Lankan context. These are only some examples, but of course I can.
Of course, we can have a conversation about this for very, very long time. But in the interest of time, I'd like to move on to Marir again. Marir, Dr. Daniel and Ms. Singh both mentioned that the gap between communities and the finance, access to finance, and how this technology comes into this. And basically, Sri Lanka, as well as being very much involved in the work in Maldives, how can the comparable vulnerable, climate vulnerable countries leverage the current technology mechanism to address this financial protection gap, particularly to CDRFI, and given that there's a stronger mandate given to CTCN from the previous COP as well. So how do you see technology mechanism as a solution for this, addressing this gap between the delivery and the availability?
Thank you, Shifaz. I just want to take a maybe 2 step back and then determine what technology is. For many over the last few decades, we have been seeing technology as kind of a very hardware-oriented thing. We see that as a solar panel, we see that as a windmill, etc., as well. But the definition about climate technology has evolved over the last few decades, and so now we see that technology is no longer only hardware associated, it has orgware associated as well, in addition to institutional arrangement. So the way the institutional arrange itself and then provide solutions could be also a technological innovation in that regard as well. Hence, the project that we are currently having, the multi-actor partnership is one of the proven examples where the communities are arranging themselves towards finding a solution associated with climate risks. So it could be it will be associated with technologies as well. Hence, I would say that technology can help to bridge this gap that we are seeking today about accessing to financial resources as well. CTCN with their mandates growing, but currently now also undertaking a review in terms of where the hosting of CTCN is going to take place in the upcoming negotiations. But having said that, CTCN has done a tremendous efforts in order to translate the needs of countries in terms of technical assistance and providing that and scaling up to other operating entities of the convention as well as the Paris Agreement as well. So maybe I would want to add one more element about the stakeholder engagement and the strong ownership, which is crucial for any technology to be adequately demonstratable in that regard as well. Thank you very much.
Thank you, Marir. Aileen, if I may pose the question to you, the same question but in the financial sense of it. So how does, there's a significant distance between the availability implementation, especially at the community level. So how do you see international policy level, what reaches communities, MSMEs on the ground? How does, what is agreed on these global frameworks could translate into action at the community? And from your experience, what are the most effective ways that potentially Sri Lanka can use?
Yeah, thank you, Shifaz. I was listening to the discussions this morning, and I think the experience from Sri Lanka is very much in line with what I have been hearing from other developing countries in the negotiation process on climate finance. That firstly, taking aside the debates about the adequacy of the finance available through these funds, the other main issue is that they are extremely hard to access. And we even heard from the accredited entity of Sri Lanka this morning about how even these kind of institutions, to get accredited, you firstly have to have a very high capacity or sufficient capacity of acceptable to the fund. But even they are having a very hard time developing funding proposals up to the expected standard from these institutions. And so it's not hard to imagine the struggles of MSMEs and community-based organizations when they want to access funding from these entities. So having said that, there are schemes like the Jeff Small Grants Program, or maybe other bilaterally supported small grants programs that these entities could take advantage of. And I think that once you are able to get past the initial hurdle of getting a project approved through a donor funding agency, then you start to develop a track record of managing these kind of projects. And also in the process, you get to develop the capacity of your institution in handling this kind of projects. So then it becomes more and more easier to get access to funding in the future. I would also like to add that the Loss and Damage Fund has a mandate through its governing instrument to find out ways to enhance community access. And I believe that the board is currently working on how to operationalize this, although I don't think we have a representative of the board, FRLD board in this room, no? Yeah. Then another thing that we heard this morning is about the need for data. And we also heard that there is actually data, but there might be, what's lacking might be a proper coordination and access mechanism for those who need it. In my previous experience developing funding proposals, a major issue that we faced was finding the highly local level data to justify the climate relevance of the proposal that we are initiating, which is obviously not going to be easy to get in developing countries where the academia is not like highly advanced. So maybe it's a good idea also to use readiness support available, like the GCF funding for NEP preparation to strengthen these kind of systems so that it becomes easier to justify the climate rationale of projects. I know that these things are easier said than done, but we have to put in an effort and hope for success, I guess.
That's a very broad answer, Aileen. So I'm gonna make it easier for us in the room and put Rukshila on the spot a bit. Um, so as a DFI who has a very strong mandate on being climate resilient and looking into climate finance as well, what specific instruments or financing mechanism that IFC see as most relevant to build resilience in Sri Lanka, especially the financial resilience in these key sectors?
So as the private sector arm of the World Bank Group, we provide both funding and advisory services to the private sector. And we have a full gamut of investment tools that we utilize to support the private sector. That ranges from debt to equity and everything in between, including guarantees and so on. So in the climate space, we have a lot of these instruments have been adapted, so they are either green or climate friendly. So if you take, for example, risk sharing facilities, we could structure with a bank to provide a risk sharing facility where we would share the risk 50-50 with the bank, where they could on lend to renewable energy sector or energy efficiency projects. So basically green assets. And that is one of the ways in which we helped develop the renewable energy sector in Sri Lanka back in 2008, 2009. And when we provide risk sharing facilities, we also make sure to couple it with technical assistance. So we provide our advisory services so that the banks themselves can evaluate the risk involved in those particular projects, as well as they can advise their clients as how to make a project energy efficient and so on. So, I mean, if you see a client looking at a warehouse project, how to make that project flood resilient, for example. So, and also we also have projects in the real sector where we would have an anchor corporate and we would work with their suppliers, distributors, and so on to help them become more climate resilient. Other instruments that we use include thematic bonds like sustainability linked bonds, blue bonds, green bonds, and so on. As well as we have green equity, where we encourage clients to go green in terms of their entire portfolio. So we have our full gamut of instruments that we use to encourage this behavior.
That's a very diverse range of instruments that you talked about. If I may ask a follow-up question, and with the interest of time, maybe I'll look into close as well. What would be the ask from IFC for financial and public sector to unlock greater potential in the international private sector, especially?
So from the public sector, it's to make available data, like I mentioned, in hazard maps to the loss data, so that private sector players can provide insurance in a more cost-effective manner, and to have a national strategy that embeds private sector solutions, insurance, and so on, as well as to be have a longer term strategy and communicate clearly what vulnerable groups will be covered, so that it's the private sector can then sell insurance to the others, as well as for them to look at covering the premiums of insurance rather than, and that allows more scalability for a national fund. And beyond that, from the financial sector, it would be good to see pricing reflecting climate risks, as well as loan officers providing advice to their clients in terms of how to make projects more climate resilient as well as energy efficient, and also embedding insurance products when providing financial solutions.
I'm going to ask the question very broad manner now. So maybe we can go to the closing statement as well. For Aileen and Marir, what can be the main takeaway for Sri Lanka? For Aileen, maybe from the financial framework that is available at the moment, what needs to be looked at from Sri Lanka? What should we pay attention to especially around the CDRFI development. We heard from Hafiz about VMEXCOM's work and loss and damage fund as well, maybe something around that. And for Marir, to access technology transfer, as I'm aware, as Sri Lanka, we have not tapped into CTS and CTCN as much as we should. How you should basically advise us, or what is your opinion in the ways of which that we can access these technology mechanisms as well to advance the implementation in Sri Lanka in a more holistic manner? And then to Mr. Satura Singh and Dr. Daniel, maybe the key ask from your sector as well as a whole. With that, we can potentially close.
Yeah, if there is one point that I would emphasize, I think it would be on the importance of inclusivity in finance. We heard across the room about how to ensure that it reaches those who need it most, the most vulnerable and the poor. And I think this is also becoming an increasingly prominent issue in the international discussions as well, how to ensure that the marginalized groups, including women, girls, and communities and local communities, indigenous peoples, all of these people are enabled to participate and access and benefit from these climate funds, and they are protected in the case of loss and damage from climate impacts. So I think starting from the project conception stage, it's very important to engage them in the project design as well, and make sure that whatever is being done is relevant to the local context. Yeah, and also even in the implementation of the project, that there are mechanisms for them to participate. Also to express any grievance or remedies as well. Yeah, I think that would be my main takeaway from here. And also how to ensure that in like insurance products and all, they are facilitated to participate in these schemes.
Thank you, Aileen, and thank you, Shifaz, for that question. Accessing to finance through the CTCN is less complicated in comparison to accessing in funds to GCF or OGF, I would say. It's very similar to the exercise that Sri Lanka is currently undertaking in order to access funds to FRLD as well. What the best thing that come across all the developing countries, including Sri Lanka, is lack of kind of coordinated sectoral efforts. Countries, including Sri Lanka, has submitted nationally determined contributions, technology action plans as well, that has identified priority sectors where the technology is needed most for the communities to address climate change. Hence, it is through the coordinated effort, because sometimes the focal point of CTCN would not be where the most countries' priority remains sector. So it would be up to the focal point to coordinate the matters internally within the stakeholders and identify like which projects or which actions that we will be able to gain assistance from the CTCN. Once an application has been provided to them, then they will be seeking from the network members, which are kind of like consortiums within the CTCN that enables to match the needs, and they will be providing those required technical assistance through them that in addition to the local partners as well. So the process was very slim and very easy in order to access the technical assistance program, assistance from CTCN, but it requires a lot of collaboration and coordination with the national stakeholders as well as local communities. So I would leave it there with the interest of time as well.
Well, I have a small comment in terms of accessing this for the livestock operators of the livestock sector. There, if I distinguish the commercial players as against the subsistence farmers who are most needed for this type of assistance, and one big constraint is the what you call verification of these losses. For which we need to have a robust system of like farms registration, identification of animals, and also a continuous process of updating this information. Otherwise, even we, for the past disaster we had, we didn't know where the farms, who had animals and how many numbers. So it was a very, what do you call it, massive task to sort of, at least to compensate the losses through the government. So in future, unless we have developed these systems and process to update data and even use digital tools to this process and training people, it will be a big effort.
Yeah, I think healthy ecosystems and sustainable tourism are key to the economic development of this country, as well as the well-being of the rural communities, because they are the custodians of most of our natural ecosystems. There again, we have to look at both gender issues like men and women, and as well as the youth as well. Then I see there are so many opportunities for these two sectors together with agriculture sector. Some are specific to these sectors like green bonds as well as green bonds as well as payments for ecosystem services. But some are general. So, and like the second question you asked, the nature-based solutions. So I would like to say that we are well positioned for this, because the both tourism and the ecosystem conservation or the ecosystem service are well connected in this particular country. And of course, as I should say, because 30% of the land in this country are covered with forests. And if you take the entire tree cover in this country, together with plantations and all internationally, it's between 60 to 70%. So that's why we call Sri Lanka as a great country. So those are really important even for the, foreign donor. If we really position these requirements and argue with them, with the donors, to tap for some, the external finance also. Now, but again, as in the morning discussions, the improvement and the justification of the climate rationale is a real issue, because the data inavailability as well as the correctness of those data. So that is one issue. But still, I think since a lot of things are emerging, for example, last year's this Sri Lanka's climate finance strategy and all these things, and then a lot of other things are happening with various projects as well as other interventions. I think we have a good opportunity for our way forward, looking at financial opportunities for these three sectors: agriculture, forestry, and tourism.
Thank you very much. Thank you, Mr. Thurasinghe. Thank you to all the other panelists as well. So my key takeaway from the panel is that we have different modalities to access these funds as well as other means of implementation as well. Being coordinated and having a good climate rationale when we do proposals is something to look at. Again, being coordinated is the key word, that everything has to come along. I remember the conversation that MAPS facilitated with the Minister of Environment for the FRLD as well. how we can leverage SNLD as well as CTCN to advance the actual implementation that is perceived from the particular proposal is also something that came to my mind when you were sort of touching on that actual matter. So with that, I'd like to close the panel. We are a little behind on time, but I think the conversation was really insightful. And now we'll move on to a bit of a conversation among ourselves. I know today's day has been quite long. There has been lots of listening to do, but that's by design because this is the Lighthouse workshop at the end of 3 years of work. Before we go to the group discussion, if there are any questions we can quickly take. Ravinder.
Thank you. So my name is Ravinder, and I'm working as a product designer for Ibiza in Luxembourg. So first of all, thank you very much for the panelists. Actually today, they're very fruitful discussions. In terms of risk transferring, so I would like to bring some note on the table, the discussion on the table, and also sometime maybe the questions, because I was trying for 14 years in Sri Lanka as a parametric insurance product designer. We design many products in Sri Lanka, but I don't know that how community knows about the parametric insurance or the climate insurance about in that context. Anyhow, before 3 months of Ditma occurred, so we designed a product for cyclone with the dual parameters like distance and the cyclone speed. And we implemented it with HNB, and also we bring the technology inside it with the dialogue. They are the most prominent network provider, even though there is no much enrollment. Why? I see that even though we are bringing more financial facilities or more projects on this context, but still I see that there is a gap between the supply and demand, because that demand side, they think that actually they don't know, they don't aware about it, even though sometimes they don't know such kind of product, what that they can get the benefit, because cyclone product, we designed for a 25 harbors point. After cyclone, that all the 25 locations are triggered. That means people were enrolled, so then there will be a claim, but they don't know it. So that means they should be educated, they should be aware about that. In that context, I see that the project needs more concern about educating and giving more comprehensive marketing and all these comprehensive educational component inside the project. From the supply side, I see that insurer, how they are looking into this. They're looking into it. It has a very expensive way to bring that product to the market, because they want to spend more staff on that. They want to invest more money on educating the beneficiaries or the client. And they have to follow more comprehensive marketing campaign on taking that product to the market. So then they are looking at the market, how it is moving. So then they are still waiting, because I know the first, in 2010, we implemented parametric insurance in Sri Lanka with Sanasa insurance, with the for paddy. But still people don't know that. Now it's 2026, the 16 years, right? I don't know that Bangladesh, India, because I design many products for many countries, right? I know that India has a very good demand for parametric insurance. Bangladesh has very good demand for the parametric insurance, but I don't know why Sri Lanka, right? So then we have to very careful about, not careful actually, we have to think about that how we can bring our project in more fruitful way to in that financing for risk financing on insurance matters for this context, because yeah. So I would like to put that questions, how we can design the projects on that context. So how we can minimize that gap between demand and supply, because there is, I think we are trying to go for a micro level, right? But yes, of course, micro level we can go, but still the meso level can do more than micro, because still we can provide services to the micro level through the meso level, right? The institutional level. So then I think there are much more to discuss, but anyway, that's all from my side, but thank you very much.
Thank you, Ravinder. I think it might be a good entry point for our discussion itself, unless you have a very concrete response to what Ravinder raised. If not, I think that could be a part of our conversation. How the uptake in Sri Lanka can be increased? Like, how do we increase the awareness around these products as well, given that regional context is slightly different to what we experience in Sri Lanka?